Hello, ladies and gentlemen. My name is Greg Mikulowski. I'm with FXDD, and this is a Forex commentary for FX3 for Friday, September 17th, 2010. What I like to do in these commentaries is take a run through some of the major currency pairs and take a look at where they stand from a technical perspective. That is a charting perspective. I like to look at things like trend lines. I look at moving averages. This is in particular the 100 bar moving average and the 200 bar moving average. The 100 bar is always my blue line. The 200 bar is always my green line, and they're simple moving averages. I also like to look at the third Fibonacci retracement level. So here we have a move to the upside, 38.2% retracement. And those are the tools that I like to use. Occasionally, or from time to time, I'll have some horizontal lines coming across at key support or resistance levels. And those are what I call remembered lines. Those are lines that the market remembers. So looking at this chart, we had a couple lows right here. The market's going to remember those lows there over time. All of it will come together in very simplistic terms. And what you're looking for is levels to lean against, or what I call borderlines. This trend line is a borderline here. Why is it a borderline? Because if above it, it's bullish, below it, it's bearish. And if I zoom in on that euro dollar chart, you can see how the market stopped at that borderline up here. Why? Because we had sellers in here against a stop maybe 5 or 10 pips away from that level. When the market stops against that level and uses that level as resistance and moves to the downside, you have a low risk trading opportunity with the potential for a trend type move that may, who knows where it may extend, but the fact is you have good trade location. So let's go and take a look at some of our major currency pairs, and we'll start off with this euro versus US. Well, I've already given you a hint a little bit about the euro versus U.S. dollar. Taking a look at this hourly chart here, folks. What is obvious here is that the last corrective move off of the low here came up and stopped against that trend line. That trend line was formed, taking these lows going all the way back to September 10th, connected to the lows of September 13th. In addition to that, you can also put a upper channel in there. I know we moved above that level, but we use that level as resistance again here and came up to that level again on the top side. So we had a nice little trend move to the upside here this week in the euro versus US dollar. And we're getting into these corrective moves, move to the downside here. That has taken us below this important trend line on the downside. The fact that we held that trend line in the last hour of trading gives the bears, puts the bears back in control here, and we could see a further rotation to the downside. Now let's take a look at the 5-minute chart, the shorter term chart, and see if we see any clues from this chart. And what we have here is another channel, but this time the 5-minute chart is showing a downward channel. We have a connect the low here to the low here, and the market got within 4 or 5 pips on the last move to the downside here. Put a parallel trend line off of this trend line right here, and you have that's a top here and a top here. So the border lines, or the guardrails, as I like to call them, are defined here in the euro, and we're kind of in between those two border lines or guardrails currently at the moment. The top side currently comes in at the 130.64 level, and the bottom side goes all the way down here to around the 129.95. Let's call it the 130 level in the euro versus US dollar. So those levels become levels of support or resistance here, and they're clearly defined, and I think the market clearly sees them, so that you expect to see low risk buying or selling opportunities against those levels. And this will extend through the weekend and into Monday's trading as well. So they become very fixed in traders' minds, and that's what we're going to be looking for. The move up to, you can see how the move off the low here against the buyers right here. This trend line came in at the 130 I'm sorry, 130.14 level. And the low came in at the 130.19, so 5 pips of risk on that trade. The market moved back higher, and we ran into that resistance against the 59 level. Again, that comes off the hourly chart, off the bottom underside of this trend line right here. That's all good news here for the euro versus US dollar for the bears. We do have to stay below these levels, stay below this line in order to keep the momentum to the downside for the euro versus US dollar. Let's transition to another chart. Take a look at the sterling versus US dollar. And like the euro, we had a nice trend line here formed off of lows, 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 and we've had instances where the market's gone above and below that trend line here after the break to the downside. And just like the euro, however, if you zoom in here on the hourly chart, the last corrective move off the low has run up short of that top side trend line at 156.53. The high came in at 156.40, 46. So we did find some early sellers against that level. We'll be watching that level as a level of a resistance on the top side this afternoon. 156.56 is where it currently comes in. Look for sellers against the bottom side of that trend line and see if the market can develop some momentum in that direction. Uh, uh, the off the 5-minute chart, we do have some lows coming in here. We are using we did use our 200 bar moving average here as a resistance level on the last corrective move to the upside here, and we are also pushing against a 61.8% retracement line of this move up from the low to the high today. The 61, it becomes a level of support until it becomes a level of it breaks through and becomes a level of resistance. And if I zoom in off the 5-minute chart, you can see and watch the 61.8. We broke through the level here, and then we used it as a springboard to the downside. We used it as support when we move back up to the upside. We use it as resistance here. We use it as support here. We use it as support here. We use it a little bit as support here against a 200 bar moving average. And in the last 3 or so hours, the markets use it as resistance, 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 resistance. This level is a key level here as we head into the afternoon session, as we head into the close. If we do break above that level, the next key level to that the market is going to be paying attention to is in this area where we have not only the two moving averages. I'm going to get rid of this line because I'm hitting the wrong button. We have the two moving averages coming together, but we also have the 50% retracement again of that day's trading range. So this is another level of resistance. So this level is resistance number 1 as we head into the afternoon trade. This level is resistance number 2. If the market can hold this level here in the shorter term, look for a test of this trend line and move through that line as a confirmation of that downward momentum. If the level gives way, that is, we break through this 156.44-ish type area, look for a test of this whole area as represented by the 100 bar moving average, the 200 bar moving average, and the 50% retracement all around the 56.60 level. And a break above that level should lead to further upward momentum for the sterling versus US dollar. What can we say about the dollar yen today, except that it's in a very narrow trading range? The low has come in around the 85.60 level. The high has come in at the 85.92 level. That's 32 pips of a low to high trading range. Not the kind of a range that you make a lot of money at as a trader. What we'll be using is this 100 and 200 bar moving average kind of as our barometer for upside momentum or downside momentum. If the price is above the line, we need to see the market break above the 92 level to confirm any further upside potential for the dollar versus yen. If the market trades below these two moving averages, let's look for a break of this trend line here as point number 1, and then look for a break of this 59 level, which is a low for the trading day, and see if we can retrace further to the downside for the dollar versus yen. On the downside, or looking at this week, we did have obviously this sharp move to the upside here for that currency pair, and that actually off the daily chart took the price well above the this trend line that's been holding the top side going all the way back to June of this year and June 4th of this year, and the move above that level has run into a little bit of a resistance here at this at these high levels, at the 88 level. This high going back to the end of August was at 88. We had other highs here. This came in at 90. So this is one of those remembered prices that I like to find in the graphs. So this is going to be obviously a key level for the dollar versus yen. If we break through that level, we could head up toward this 87.01-ish type area, and it's not out of the question to think that the market may go to either 38.2% retracement, or the 100-day moving average off the longer-term chart in time. The market has been below those key or below the 100-day moving average going all the way back to the middle of June, and it's a corrective move that corrects just a 38.2% retracement of the move down that we've seen of late here in the dollar versus yen is 38.2 is a minor correction for that currency pair, and so to see that correction come up toward the 87.92-ish type area it would not be a surprise to me. So there you have it. To look at the dollar versus yen, a look at the euro, and a look at the sterling versus U.S. dollar. My name is Greg Michalowski, and this is a forex commentary for FX Street.